Accounts receivables are sometimes also referred to as trade payables or debtors. They occur when a company sells goods or renders services to customers on credit, meaning that the customers don't have to pay straight away, but they can settle the amount at a later date. As a result of this arrangement, the company is owed money and it records this accordingly. And we show what we call a current asset, accounts receivable. Let's do an example. Tactus Advisory invoiced clients for $5 million worth of work in the past month. The invoice states settlement must take place within 30 days of the invoice date. What would the journal entry be on the day the invoice is processed? Firstly, for Tactus, there would be a debit to the accounts receivable balance sheet of $5 million that shows they are owed money. And then there would be a credit to the revenue or sales in the income statement of $5 million, showing that they have done some work and they have invoiced. If you had to see the journal reflected in the T account and general ledger, you would see a debit of $5 million in the accounts receivable T account and a credit of $5 million in the revenue T account. Let's do another example. Tactus Advisory invoiced clients for $5 million worth of work in the past month. The invoice states settlement must take place within 30 days of the invoice date. Question: detail what the journal entry process would be on the 30th day after the invoice was issued, assuming the client had paid. Very, very simple. There would be a debit to the bank and cash in the balance sheet, and that shows that the client has paid the $5 million. So there'll be a debit of $5 million to the bank and cash. On the credit side, they would credit the accounts receivable, showing that we are no longer going to receive money from the client. The client has paid and made good on what he owes. So there will be a credit to the accounts receivable. If you had to see the journal reflected in the T account and GL, you'd see a debit of $5 million in the bank and cash T account and a credit of $5 million in the accounts receivable T account.